So a little bit about me. I essentially studied computer systems engineering at John Moores University quite a while ago. Some people recognise me, I don't know. It was a long time, 15 years, something like that. I set up my own IT business, doing IT and telecoms, everything down to the wire essentially. So we'll stick in, I don't know, Cat5 cabling, switches, servers, do server migrations. I'm a Microsoft certified systems engineer. We've got a small team essentially, a few nationwide customers, things like that. And then a couple of years ago I started researching the Bitcoin bubble, the original bubble, not the one last year, and sort of started to look for the next best thing, and sort of quite heavily got into it, from which I spoke to some business associates of mine, and we set up an investment arm. So that's essentially what I've been doing for the past couple of years. So this is going to be sort of quite a high overview of Bitcoin and other cryptocurrencies. I've been given a bit of a brief from Keith, and I'm going to stick to that. So I'm going to talk for about 30 minutes, 25-30 minutes, and then we'll do a Q&A at the end. Okay? Is that alright? I have got a sore throat, so bear with me if I start coughing, etc. In fact, I perhaps should have brought a glass of water. Thank you very much. That wasn't a hint, by the way. Okay? First of all, disclaimer. Obviously, I'm very pro cryptocurrencies. I'm invested in myself. I'm setting up a company in order to bring institutional money into it. Anything I say is not investment advice. Obviously, do your own research and stuff like that. I won't be telling you to invest in the next big thing or anything like that. I don't expect you to go away and put your life savings into this. In fact, if you did, you'd be crazy. But that's just the disclaimer. This is a regulated activity. I'm not an IFA or anything like that. And it is, although Bitcoin and blockchain technologies is not a regulated space. If you put your money into it, that is a regulated activity. Okay, so that's just the jargon over and done with. Okay, I'm going to start with a brief summary of Bitcoin and blockchain, just to bring everybody up to speed before we start talking about where you can get it and what you can do with it and different things like that. So one of my colleagues always does a show of hands. Who's actually bought any Bitcoin? Hey, 3 or 4 people? Okay, great. Any others? Any apart from Bitcoin? Right. Okay. So a couple of investors here. All right. Brilliant. So essentially, blockchain, and I apologise for the level of text on this. It's just to get it all in, and then we can get past it. It's an emerging tech, and a lot of people believe that it will revolutionise the way that we connect, interact and operate with each other. It's a distributed database in its simplest form. We call it a distributed ledger, essentially. It maintains a continuously growing list of records, which are just transaction histories and other information. And once a block has been added to the end of the chain, it can't be retroactively modified. So that's the most important thing about blockchain tech. It's essentially immutable, and you can't, go back and change something once it's published on the blockchain. Okay? It's not like you've got one server with some data on it, you can just log in and delete it and remove it from the backup as well. That doesn't happen with blockchain. Okay? Blocks are broadcast securely on the internet, and the chain is stored by thousands upon thousands of nodes all around the world. So they're working in consensus with each other in order to maintain the chain's integrity. And that's where the value comes into it, essentially, as an immutable source of information. Okay? Real-time block transactions are verified by random selection of these nodes, meaning despite being completely public, it's actually extremely hard to disrupt or change the data stored within the chain. So computer scientists actually now believe that it's faster and more secure than traditional bank ledgers and the technology which Visa have and MasterCard have. Although they're running more transactions per second at the moment, if the blockchain can be scaled up, it could essentially take over that process of transaction verification. Okay? The first public blockchain was created and released, which was Bitcoin in 2008. The Bitcoin blockchain is still alive, obviously, you've heard a lot about it in the news. Currently, I changed these figures today, it's worth $148 billion, so that's their market cap. So essentially, if you gathered all the Bitcoin into one room and put a price on it, it'd be $148 billion. One Bitcoin is now worth approximately 9,000, a bit less when I looked before. Obviously, it's a volatile asset because this is an emerging market still. You know, when people look at the price of US dollar, which has been trading for a couple of 100 years or however long it is, you know, Bitcoin's only actually been in existence since 2008. That's not the fire alarm. Okay, so in 2010, Bitcoin was just trading at 6 cents. So obviously that's a massive increase, going from 6 cents to $9,000. The other thing about Bitcoin before we move on is it's very, a lot of people see it in the news as a gold coin. You've seen it in the Financial Times, on the front of the Daily Mail, probably telling you not to buy it because it's involved in dark web and stuff like that. But essentially they always have this picture of a spinning gold coin with the Bitcoin logo on and some private key or address sort of engraved around it. That isn't, you can get those made as a cost, but that is not, you know, they are not sort of franked and given to you like the Royal Mint would, you know, do pound coins and stuff like that. That's just in order for people to visualise what a Bitcoin is. It doesn't physically exist. It's just a number on ledger. Okay, that's essentially what it is. Alright. So Bitcoin's largely proven tech now. It's been around since 2008. I say that with a smile on my face, but I think it is anyway. And the network topology of the Bitcoin network and others is entirely decentralised. So essentially there's no governing body, there's no one single person in charge of it, there's no central authority or bank. It validates itself, a bit like a hive would, but without the queen, if that makes sense. I know a hive wouldn't work without a queen because there's pheromones and stuff, but you know, it's a similar analogy essentially. Okay, so moving on from that, where can I spend my Bitcoin? This is a map of Great Britain, obviously, and that is all the places you can spend your Bitcoin, if you have some. The source is where-to-spend-bitcoins.co.uk. It's pretty accurate. I don't think it's entirely inclusive, but there's essentially hundreds of places where you can spend it. I wouldn't get too excited about it at the moment because I don't think Tesco or John Lewis or any other of those companies accept Bitcoin. We'll come on to some reasons why they don't in a minute. But you know, people accept Bitcoin. I think there was an article which I read either in the FT or something the other week or the other month. Somebody was selling their house and they would only accept Bitcoin, and it was in order to get round capital gains tax. Obviously, if Bitcoin was on the up at the time, they thought it was a good idea to get some. This person lived in Mayfair and had millions of pounds, so they were a bit crazy anyway. But so you know, people do use Bitcoin and they do transact with it. Okay. Bitcoin ATMs. This is an interesting one. So this is a map of London. There's 2 ATMs that I know about in Manchester. I don't think there's one in Chester or one in North Wales. There's 2 in Manchester and there's quite a number in London. So this is where you can take your hard-earned money, sterling, you put your £20 notes in a machine and you buy some Bitcoin, it'll give you some Bitcoin back. And what it does is it essentially gives you a receipt saying you've got this amount of Bitcoin. It gives you a temporary wallet, if you like. It doesn't give you gold coins, which are Bitcoin back or anything like that. You'd be a bit of a fool to use one of these machines because I'm pretty sure there's a high transaction premium. If you want to buy Bitcoin, I'd suggest you go to, you know, CoinDesk or whatever online and buy some. I think they charge you a crazy premium to use one of these machines. Interesting anecdote is what we've seen when we were in London and having a look at one of these machines ourselves, is people coming out of a hotel with fistful of money and literally feeding it into the machine. And all that we could gather is that they were employees of the said hotel being paid in cash and then putting their cash into the machine and receiving Bitcoin back, which we thought was quite odd. Maybe they were sending it abroad, maybe they wanted to get around tax, etc, etc. Okay? So there's various different Bitcoin ATMs which you can go to. This is what you'll get from one of them. It's essentially a temporary wallet. So this is a public key here. So that'll be the address. If you put that into a Bitcoin blockchain explorer, it'll show you how much money you've got in that particular wallet. Folded over, which you can't see, will be the corresponding private key. So in cryptography, like with an SSL certificate or whatever else, you'll have a public key and a private key, and you'll sign transactions between the two, you know, in order for that to be cryptographically secure. Okay, so the public key, if you like, if I was to sort of explain this in modern terms, would be your sort code and account number, and your private key would be your password or your bank widget in order to access that online and do a batch transfer or move the money. Okay? This is a very interesting table which one of my colleagues put together at the beginning of the year when we were doing another talk. So imagine there's 300 billion Bitcoin in circulation. There's not, there's actually 148 today because the price has dropped in the last couple of months. But this was correct as of the beginning of the year on Bloomberg. So 300 billion is 0.3 trillion, right? So that's one Bitcoin there. Amazon, the market cap of Amazon, their share price is about 400 billion, 0.4 trillion. So that's only 1.3 times bigger than Bitcoin. So Bitcoin is, you know, a relatively large and an expensive thing in market cap, and it is sort of, you know, becoming quite serious, or a serious investment for people to stick their money in. And as we move up the table, we've got Apple, which is worth 700 billion. It's 2.3 times bigger than Bitcoin. You've got all the cryptocurrencies, USD in circulation. The gold market cap, that's all the physical bullion in the world, is worth 8.2 trillion. That's only 27 times bigger than Bitcoin, which actually isn't a lot if you think about it, when you think that gold is essentially backing up all the central banks around the world, the ECB, London bullion market, etc. So, you know, Bitcoin, you've got to sort of weigh up in your mind, is this overvalued or is it actually undervalued, you know, essentially in comparison to these other industries and markets. Physical money, that's physical money in supply globally, is 31 trillion. I believe my colleague calls it the M1 money supply globally or something like that. So that's, you know, paper money and coins and stuff like that. Stock markets are worth 66 trillion. That's only 222 times bigger. That's the global stock markets, by the way. Only 222 times bigger than Bitcoin. And then there's all money, which is $89 trillion. Just under 300 times bigger than Bitcoin. And just to give you an idea of that figure, if Bitcoin was worth 300 billion today, it's worth about 148, I think. The financial services sector contributed 119 billion to the UK economy in 2017. So essentially it's twice as big as the entire profit from the UK financial services sector. So if you spent $600 on Bitcoin in 2010, you'd have a pot of $90 million and presumably quite a big taxation problem. Okay? So, why is Bitcoin not so great? It's not widely accepted. We've seen from the map, you know, more and more stores are coming online. I think eBay have made some noises and Amazon have made some noises about accepting Bitcoin at one stage. I think Amazon sort of are in certain countries but not in others. It's certainly not, you know, widely transacted. Wallets can be lost. There's loads of horror stories about that. There's obviously volatile price fluctuations. It's a young market and a young asset. There's no buyer protection at all. So, I mean, we talk about an immutable blockchain. If I transfer one Bitcoin to you and you give me a bicycle in return, essentially, if I decide that bike's crap and I want to give it back to you, there's no way I can force or go to any governing body or central authority and say, send me that Bitcoin back. It's essentially there forever, and you've got trust in the blockchain for one reason, but you've also got to trust the person you're transacting with. It's not got a physical form, which people can't get their heads around. Again, this notion of the spinning coin and different things, or can I put it in my back pocket and all that kind of thing. And it's not actually backed by anything. When we look at traditional fiat currencies, where you've got dollars and sterling and the Swiss franc or whatever they use over there now, that's backed by your acceptance in that government and your sort of ability to trust that government and that economy around it. But it's also backed by the central bank, which has gold reserves and stuff like that, and stocks and shares in different portfolios. So you know that money will always be worth something because it's got physically backed assets somewhere down the line in a vault or whatever, in a central bank. Bitcoin isn't backed by anything apart from proof of work. So the only thing which gives Bitcoin value, apart from the speculative value, which people are speculating buying it, is the fact that it's actually cost about $1,000 from the last calculations we did to make a Bitcoin or to create one. So that's in computing power essentially. So if you wanted to mine a Bitcoin and you joined a blockchain mining scheme and you bought some expensive graphics cards and you fed the computer with electricity for a couple of months, it eventually spit out a Bitcoin, and that is worth currently what, $9,000. You probably spent $1,000 in hardware costs, depreciation, electricity costs and stuff in order to contribute to making that. So essentially it's not backed by anything apart from some time and money that you put into it. Okay? That's the uninteresting stuff which we know about already. What we need to have a look at is, can Bitcoin actually be used as a currency to transact with as quick as you would sterling? Can you pay for something with your Visa debit card and it just transfer Bitcoin, etc., etc.? The answer is no, it can't at the moment. The transaction time today, I looked at the Bitcoin network, 47 minutes. So if I were to send you a Bitcoin, or part of it, half a Bitcoin, or 0.001 of a BTC, it would take the network 47 minutes to confirm that transaction and place the Bitcoin in ledger in the receiving person's account. Okay, I mean that's rubbish. You can't pay for your coffee with it. 47 minutes stood there at the till waiting for something to transfer. Backs is quicker these days. It's pretty much instant. They say less than 2 hours, but it is there in half a second or whatever between banks. So we can't actually use it for anything, which you buy your paper or day-to-day stuff with. The block size is too small. This is my personal opinion. Some people might say it's not. So you can only fit a certain amount of transactions in per block, and each block takes a bit to mine and it's propagate throughout the network, etc. And one of the big points about Bitcoin is it's actually centralized in China. I do believe that 70% of the Bitcoin's hash rate and the power which goes into mining Bitcoin is in the Chinese continent. Now, if you're looking at the model of the perfect decentralized organization, if 70% of it is in China, it's not very decentralized. And of course, you'd worry about maybe the Chinese government clamping down on Bitcoin, etc., and that removing 70% of the hash rate on the network, leaving the network vulnerable, tanking the price of Bitcoin presumably, etc. So really, in an ideal world, with a cryptocurrency, you're looking for something, if it's going to overtake traditional fiat currencies, you're looking for something which is done in microseconds, can handle Visa level transactions, is super fast, doesn't take up much computing resources to run, and is completely decentralized, so it's peppered all over the world. Okay? So, what's happened since Bitcoin? Academics and people in the industry realised that Bitcoin could be used to perform more useful tasks apart from just, blockchain could be used to perform more useful tasks apart from just processing and transferring value, sending money from one wallet to another. So they thought, well, this is really good tech, it's immutable, it could be quick, we could do more things with it, we could store more stuff on blockchain, or we could use blockchain to validate some other things. We don't just have to send money from one wallet to another, we can do some other cool things with it. So thousands of tech giants across the world started working on blockchain projects, and there's currently a new emerging market. That's why we've seen what people call essentially a bubble at the beginning, so the end of last year, beginning of this year. So some examples, talked about it already, wallet to ledger settlement of funds in microseconds, faster and more transparent than Visa. An internet accessible virtual machine which allows anybody to create smart contracts. So you can publish a smart contract on the blockchain with a set of instructions which everybody can read. You can charge that smart contract with value, and then you can tell that smart contract to execute something, of which it will do completely autonomously. So an example of that would be to, in the future say, if you wanted to create a will, you could publish it on the blockchain, and you could say, if I don't send 0.1 Ether or 0.1 token to this address on the internet every year, distribute this pot of funds which are held within the smart contract to X, Y and Z, and that would completely act autonomously. It would be immutable, indestructible, and essentially would cut out solicitors, escrow services, stuff like that, a lot of bureaucracy and things. So there are genuine, good causes and reasons for this sort of technology. Pay-as-you-use metering systems for anything such as gas, electric, mileage. We've seen Tesla integrating blockchain stuff. So essentially they want to create fleets of cars which you rent, and they charge you per mile, and they bill instantly from a digital wallet which you will have, stuff like that. The advantage of this sort of stuff is there's no human meter readers, there's not some guy who comes and checks the meter, there's no servers which run the system, it all just plugs into the blockchain which already exists. So this infrastructure already exists around us and people can start using it. No billing systems are required. Identity management systems that will provide or revoke you access to different buildings, public places, etc. So this links into identity systems and governance and stuff like that. Asset tracking systems to speed up and revolutionise global logistics, and microtransactions and augmented reality. We all depend on blockchain in order to get them to work properly. So this is the total market capitalization of cryptocurrencies. So this is all of them. Bitcoin is the one in orange, Ethereum is the dark blue one there. We can see that as time's moved on from July 2013, Bitcoin has become less dominant and the other cryptocurrencies have started to take over. I believe that this links into the fact that people have cottoned on to perhaps Bitcoin isn't an amazing transfer of value mechanism, but it's more perhaps a store of value. Okay? I'm trying to speed up because I'm aware that I've done 25 minutes so far. So who's doing all this? Bill and Melinda Gates have chucked some money in to a company called Factum. There's hundreds of millions been raised in crowdfundings, that's ICOs, to kickstart blockchain projects, all doing different things, and you can essentially buy tokens like you would shares in those. Intel, UBS, JP Morgan, Santander, BP, Credit Suisse, they're all involved in the Ethereum blockchain. They've created an official alliance and supporting it. IBM are doing something called Hyperledger, which you'll hear about from Matt Lucas. IBM are leading Hyperledger, and Microsoft are leading the way in creating a blockchain as a service and essentially putting that on there as your platform, which is touched by millions of people all around the world already. The United Nations have also said stuff about adopting Bitcoin and Ethereum, and Christine Lagarde from the Monetary Commission is going on about it as well, essentially. So this is a little bit about how you make the money, essentially. You can choose to mine these cryptocurrencies yourself. I won't go through all of this, and I think the slides will be available on the BCS website afterwards. But essentially you've got proof of work systems and proof of stake. The difference between those are proof of work systems are essentially where you complete the computation of the cryptography in order to crack a block, build a block onto the blockchain. Proof of stake is where you have you stake digital money on the blockchain in order to verify transactions on the network and stuff like that. Many blockchain currencies and tokens are limited in issuance and supply and have low inflation. That's why they're worth a lot of money. Whereby you've got a central bank who can just print money with things like quantitative easing, or there's then interest rates to take into account. With blockchain stuff, depending on the blockchain you're looking at, some of them are entirely limited, some of them have low inflation. Because they're immutable once they've started, you can't then go back and change economic policy on that chain. Okay? I think there's a statistic somewhere which I think there'll only ever be one Bitcoin for every 365 people in the world. There won't be any more than that because Bitcoin's, the issuance has been halving every 4 years or something like that. I think that's right. I don't particularly pay that much attention to Bitcoin politics. Okay, so I was highly sceptical. This is the market capitalization of cryptocurrencies. We can see that in January this year, when it was all in the news, one of my colleagues was on the One show showing pensioners how to buy Bitcoin or something crazy like that. They all just basically came back and said, we don't know what it is, we can't spend it quick enough, and it's halved in value since we've got it. So it wasn't a very good experiment, but it's what BBC wanted us to do, so there we go. So it basically was worth next to nothing a couple of years ago. It's now touching on or heading towards $750 billion. I would encourage anybody to do their own research. There's some quotes there about what people who you may or may not believe or agree with have said about Bitcoin. There's different blockchains, coins and tokens. It's not just Bitcoin. We categorise these as equity, security or utility. I'll just gloss over this very quickly, but essentially an equity token is relatively underused. It's something which you can prove that you've got a certain share in something. A security token improves liquidity. It's usually asset backed. There's a few blockchain tokens you can get out there which are actually linked to physical gold, so that you know that one token will be worth X amount of grams of gold, etc. And then there's utility tokens, which are tokens which are issued to people on the internet in order to use a service. And that's the price is dictated by the demand of the service or the circulating supply. So there's various different things you can invest in, essentially, depending on what you believe in. Bitcoin and the rise of the altcoins. This is the top 10 at the moment as of today. I updated this just a few minutes before the presentation started. So as you can see, we've got $149 billion in Bitcoin, $72 billion in Ethereum, and then followed closely by the rest. Bitcoin Cash is a fork of Bitcoin when the developers couldn't agree what to do, so they forked the chain. Not just the developers, the miners. And then we've got various other different coins, some of which have been out for a long time. But that just shows you that essentially Bitcoin is perhaps losing its dominance, and these other coins called different things are coming up behind it with better network effect, they're faster, they're more reliable, etc., etc., and they're vying to take Bitcoin's spot at the top of the list. There's been a lot of talk about ICOs in the news recently. That's initial coin offerings. Essentially, anybody who knows what they're doing can write about 100 lines of code, publish that on something like the Ethereum blockchain, and create their own ERC20 token or Ethereum compatible token, which they can then distribute as part of their business plan. We're highly sceptical of these at work, because essentially, if you went into a bank or building society or sat in front of some angel investors with a business idea on a couple of sheets of white paper and a fancy website and asked them to loan you, I don't know, $100 million or something like that, they'd laugh you out of the room, or they'd want a serious amount of security involved in order to do that. These ICOs, they seem to be able to write a few things on the back of a cigarette packet, put up a fancy website, 100 lines of code, publish it on the blockchain, and they're getting $100 million at a time for the crazy project, of which you have no comeback with at all. That once you've given money to an ICO on the blockchain, there's no regulatory oversight, there's no governance, there's no anything. In fact, they could run the company for a day, then shut it down and take all the money, and there'd be no comeback whatsoever. So it very much is blind faith with some ICOs, and we would sort of recommend that you steer away from them. That's why a lot of blockchain stuff is getting a bit of bad press at the moment. I've got some investment horror stories. I've got about 5 minutes before I'm going to have to take Q&A. So essentially, we had something called the DAO hack in 2016. This was in the Ethereum ecosystem. So Ethereum is another blockchain, and it has its own cryptocurrency second to Bitcoin. There was 18,000 stakeholders, and $50 million at the time in Ether was drained from that system. Essentially what happened was a smart contract holding all the stakeholders' money was published, and although there was no problem with the overarching Ethereum protocol, there was a discrepancy within the smart contract code. It was picked apart by computer systems engineers, hackers, and that money was drained into a wallet which they controlled. And of course, because the blockchain is immutable and not reversible, they'd have the money. And they disappeared off of it. Ethereum ended up forking their chain in 2016 in order to give the money back to DAO holders. So you can change a blockchain if you decide to rewrite and fork it, but there has to be consensus from everybody who's mining and working on that chain, or more than 50% anyway, in order to do a fork, which is incredibly difficult to get agreement from. There's a man, I think he was in Wales actually, somewhere. This was from The Independent. I remember at the time he threw away £80 million worth of Bitcoin. So essentially he stopped mining in 2009. He broke his laptop up. He put his hard drive in a drawer because he thought there's some private keys for Bitcoin on that, I'll keep that. And then in 2013 he was having to tidy up and he threw it away. He's currently, I'm not sure he's been successful or not, but petitioning the local authority to dig up the landfill site where he believes his hard disk is. Crazy, I know. So there are some horror stories, and then one quite funny one was I don't know if anybody's heard of IOTA, but it's a new sort of blockchain, rebooted blockchain version 3, which uses a different type of ledger. It's sort of more of a tangle than a linear chain, and we decided to invest in it and work, again, not investment advice, so we poured quite a bit of money into it. We did all the research we could, we downloaded the official wallet, we backed everything up, we did all our work, etc. We transferred the money from the exchange where we bought the assets into our account on Ledger and refreshed the balance, and it wasn't there. And to this day it hasn't come back, essentially. We do know it exists, but we can't actually get the wallet to tell us the balance. I mean, who really wants that, a wallet which you sort of look at it and you don't actually know how much money you've got, etc. So that's what we've got. So essentially it was a little bit like this raccoon which gets this stuff and is really pleased with it, and it sticks it in what it thinks is a safe place and it just completely evaporates. So that was circulated in the office for some time. So just finally I'm going to wrap up and we're going to do Q&A because I've done 35 minutes and I always overrun these things. The stuff which could go wrong in blockchain, it is a very new thing. You've got to have faith in the developers who are developing the protocol, who are constantly evolving the systems. They're setting up foundations, like in Switzerland and things, which have certain rules and such in order to govern the way in which the systems are developed. It's very difficult to set up a foundation to govern an autonomous organisation, but they managed to do it. And then we've got things like coordinators which are in place on networks. Bitcoin doesn't have a coordinator, but stuff like IOTA at the moment during its fledgling stages has coordinators on the network in order to ensure that everything's done securely. Once the network grows and has enough nodes to validate its own transactions, coordinators will be removed, but you've got to have trust in whoever's doing that. There may be tighter regulation around exchanges. This is where you go and buy your Bitcoin or cryptocurrencies in future. Certainly if I was the HMRC, I'd be hovering around the exchanges and having a look at who's got accounts with them. And it's also possible to ban Bitcoin and other things. China keeps going on about banning Bitcoin. I'm not sure how they can do it because that would be similar to, I mean, how do you ban a cryptographic network which everybody's using? It's very difficult. You'd have to do it at an ISP level and then there'd be ways to circumvent that and such. And if at the end of the day, if people want to use it and it's got value, people are still going to set up nodes, etc. So just a little bit at the end, some tips on how to invest in cryptocurrencies. For me, it's only use exchanges where you perhaps had a friend or somebody who's used them and bought off them successfully, and always use a hardware wallet and do backups and things like that. You don't want to be the guy who throws his hard disk away.